One of the biggest difficulties of Canadians is knowing how to save.
Welcome to The Homestretch, your go-to podcast for real estate trends, expert insights, and unique paths to homeownership. In today's episode, we chat with industry professional Paulina De Menezes about the evolving real estate market and what's next for homebuyers and industry pros in 2025.
Hey everyone, welcome back to another episode. My name is Alyssa Goulart. I'm part of the marketing team here at Ourboro, and in today's episode, we're going to be talking about the recent, past, present, and future of the market. And to do that, I'm joined by our referral partner and mortgage specialist, Paulina De Menezes. So thank you, Paulina, for making the trek down to Toronto for this.
Thank you so much for having me. It's really exciting to be here. As you mentioned, I'm a mortgage agent with Dominion Lending in Barrie, and recently I became a financial specialist as well with Primerica. So I'm trying to be able, I'm trying to be able to offer the whole package for my clients.
Oh, that's awesome.
Yes, it's exciting.
Yeah. So Paulina, I think, correct me if I'm wrong, but last time we spoke, you kind of heard about Ourboro at our open house, right? Where you spoke to Nick Pope, one of our co-founders.
Yes. Yeah. That was back in 2022. It was the first open house that I went to, and I was really, really surprised with the whole process and how it's just seemed too good to be true. It was a huge open house. There was tons of people, so I took tons of notes and I tried to speak to as many people as possible to try to understand the program. Very, very shortly after, I was able to use the program, and I was very surprised to see how easy it was to just deal with the whole situation from start to finish.
Mm-hmm. And the rest is history. You've been closing deals ever since.
I have, and it's something I keep in my back pocket every single day.
That's awesome. So speaking on closing homes, you weren't always a mortgage agent, right?
No, I was not.
Yeah.
So I started in the financial industry in 2006, finishing university all at the same time, not thinking that was going to be my future. And I grew in the financial world for years till 2018 when I had my second child, and I decided to try something different while on mat leave. I ran a franchise for 6 years, a coffee shop, which I now have sold. And in 2021, I went back to my financial world through COVID so that I could still do something. And I got my mortgage license because it was something that I really enjoyed, working in the financial world, to be able to help somebody reach that dream, the Canadian dream, if we can call it, of coming over and being able to create a future and buy a piece of land to be able to leave for your kids at some point. Being able to be a part of that is the most rewarding part of my job.
Yeah, that's awesome. And would you say that your background, like as an entrepreneur / franchise owner, contributes to how you approach your job now?
100%. Because even though you get exposed with different people throughout life always, I think in the different areas that you work and being an entrepreneur and having seen that firsthand of the struggles that you have as an entrepreneur, it makes me so much more able to understand other entrepreneurs, because I think one of the biggest hustles that self-employed people have is the declaration of your income compared to what you actually make, and being able to approve with a normal lender based on your income. So I am able to kind of see that in the bigger picture and implement that with my clients to be able to find the best option for them.
Yeah, and you're a mom on top of this all. So
and I'm a mom.
Juggling all 3-4 of these things. So how do you do it? How did you kind of?
I think the most important part is time management.
Yeah.
Right. And because I have the flexibility as a mortgage agent, is a fantastic industry to be in.
Yeah.
When the world is doing well, you're needed because people want to buy homes. When the economy is not so strong, you're needed because you need to refinance. So it's a fantastic industry to be in, one that is never going to go away. It's always going to be there. And I'm able to do it in between being a mom, whether I'm going to meet with a client now or do we do it with a Zoom call. It's super flexible to be able to now do the extra part of having my financial representative certification as well, to be able to do investments and life insurance and everything that is needed for a person to be able to succeed to retirement without any worry.
Yeah. Wow, that's awesome. Congratulations on all
Thank
that
you.
success. Now just like shifting gears into the actual market talk. So 2024 was a wild year in the market. There was a lot of changes. We had the mortgage insurance price cap increased to 1.5 million. There was the 30-year amortization periods that were expanded, and then on RRSP withdrawal limits increased, and that's just a few of the things that happened. So, and these are just all generally good things for first-time homeowners and just people trying to get in the market in general. But there are also things that affect your role. So how did you see that affect your role last year?
Absolutely. So it's we've had the last, you can say, 3 years in the market have been insane. The interest rates that we faced have been the highest in years. So a lot of people not only overextended themselves 2 years ago when they bought a home that is now valued sometimes a little bit less than what they paid for, having to renew at a much higher interest rate is being very, very difficult. Unfortunately, we have seen a lot of foreclosures happening over the last few months because people are just, they're not able to maintain that lifestyle with the recent increase in interest rates. So having said that, now things are starting to become more normal. Our inflation rate is where we need to be. So everything is starting to get normalized. But I think people are still scarred from all of the suffering over the last few months, that they're still holding back and not wanting to get into the market. However, that has caused the home prices to drop. So it's a fantastic time for people to buy. You don't have to worry so much about what your interest is right now, as opposed to buying the home that is right for you at the right time for you.
Yeah. It's like, don't time the market. Get in when it's right for you.
Yeah, absolutely. 100%. Because it doesn't matter if you're buying at a high or buying at a low. If it's going to be a home that is going to be your home and it's not an investment purchase, it doesn't matter.
Yeah.
Because if you don't actually own your home, you're paying 100% interest rate on your rent.
Yeah.
So in the end, you just want to find the right home for you. And take advantage of that. Now with the changes that the government has implemented, obviously the 30-year amortization helps because now you can amortize your payment over an extra 5 years, making your payments a little bit more attainable because they become lower, or buying a home more expensive, right? It all depends on what works for you as a family. Yeah. But the one that I kind of really liked was the down payment for the RSP. So before, it was the maximum you can take out was $35,000. They have increased that over the years, but it's never been such a jump as of now.
Yeah.
So they went from $35,000 to $60,000, which is fantastic. So rule says after you withdraw, you have 2 years to kind of start paying yourself back over a 15-year span.
Yeah.
They have also increased those 2 years to 5 years if you do it prior to 2025.
Yeah.
So that is a fantastic option for somebody who has accumulated a strong, healthy balance in an RSP, that they can use that for a first-time home buyer down payment.
Yeah, and then that with the FHSA accounts too.
Absolutely.
So those two together, great. I'm definitely using that.
Exactly.
But yeah, the great. Good changes
yes,
that came.
Yes, 100%. So
overall.
hopefully now the people feel more comfortable getting back into the market and finding their for now home, because not always is your forever home. Your first home is not your forever home, but get that home that you can put your family in right away.
And then with all these changes, did you find anything that changed in how your clients perceived Ourboro or how you had to approach your clients with our product? Or did you think...
To be honest with you, these changes have been great.
Yeah.
But it doesn't help a lot of clients right now immediately. So having the extra $25,000 available for a down payment that you could withdraw from your RSP if you had the funds.
Yeah. It's
that's
only
great.
if you have them.
If you have the funds. That's where the secret comes. So unfortunately, these changes are great down the road for somebody who's planning now to kind of get there. But somebody who wants to buy now, they need to have the funds today.
Yeah.
So unfortunately, I think that I still have to rely on Ourboro's program to be able to help those clients get into their homes because they still don't have that down payment available to be able to buy.
So even more now with
Absolutely.
us. Yeah. So in case our listeners didn't know, and I'm not sure if you were aware as well, but Ourboro is actually part of an ongoing 10-year study with researchers from Conestoga College, and it's exploring whether or not participation in a shared equity program improves a person's quality of life compared to if they were renting. Yeah, so we actually have a podcast episode about that too, so you can go and listen to that if you're interested. But why I bring that up is because in an initial study that we did, we found that 45% of renters feel that saving for a down payment is one of the biggest barriers to home ownership. And we kind of just touched on this, but like, do you find that number, it correlates with your findings as well?
100%.
Or even more?
I think it's actually even more than that. Because you can't control your job, right? So if you're working full time and I tell you, you know what, you don't have enough income to purchase what you're looking for, it's hard to turn around and go find another job. Or ask your boss, I need an increase. Like it's not something that you can control. The down payment, you've kind of saved up over time, but it is one of the biggest difficulties of Canadians is knowing how to save. There was a recent post for the TD that came up that says for every dollar that we make, we spend $1.96. So it is common that most Canadians don't have the knowledge or the means to know how to save, because it's a skill. It's not something that you learn or you know. Sorry, it's something that you have to learn, and it's a skill that you have to perfect. So if you're looking to buy a home and you have a good income coming in, your credit is good, but you don't have a down payment available, Ourboro's there. It can help you immediately. It's not something you can wait for. As long as you have your 5% available, then you're good to go. Common with Ourboro, we figure out the best way to find a home that would fit your family. Because most times, if you have something saved up, probably the home that you'll be able to purchase, similar to what you were saying on the analysis that you guys have been doing, you won't be able to buy a house that satisfies your needs if it's not because you have the help of Ourboro. Your purchasing power grows astronomically with the help of Ourboro.
And then there's so much market uncertainty right now, especially with like our political climate and everything that's going on with that. How do you stay motivated with all of the uncertainty in the market? And how do you keep your clients feeling motivated and okay with like this huge purchase they're going to be making?
Of course. I think the best way to kind of give somebody calm is knowing that it's not the first time this has happened. It's not the second time. It's happened over our history, right? Like the biggest one that we've had prior to now was 2008. And where are we now compared to 2008? So I remember, because I was working at the bank at that time, and people would be like, oh my God, I don't know what to do. I'm losing money. I don't know if I can buy my house. And if you had purchased your house in 2008, today you're laughing. Because the equity that you've built up over those years is substantial to be able to continue what you need to do. So right now, I try to now make sure that clients understand that. If you are looking into buying a property today as an investment option, then there's certain other variables to look at. But for homeowners that we help out together, it's your home for your family. So it's just understanding that right now is the best time for you. You go in it.
That's great advice. So we just spoke about how last year people were still hesitant to get in the market. But if you look at some of the predictions that are out there now for 2025, it says that there's actually going to be a market boom. Have you started to see that? Is that what you're kind of expecting too this year?
Absolutely. Because now people are getting more used to the interest rates. That definitely is going to bring in more calm, once people feel more comfortable. Absolutely. I think one of the biggest trends that we're going to face in 2025 is renters moving out of renting and actually moving into home ownership. AI is also a big thing that is coming along. So AI is helping a lot with new businesses being introduced into the economy.
Oh, okay.
So that is creating a little bit of a shift for the lenders, because now lenders have to accommodate this huge potential income that is coming into to the economy. Most times you have to be in the industry for a while so that the lender could feel comfortable lending you money.
Yeah.
But AI is not new, but it's newish. So it's
how advanced it is
it's
new.
crazy.
Yeah,
It really is. And a lot of people are really using that to make money, like digital marketing. And how do you prove to a bank that you're making $10,000 a month on digital marketing? You know, it's a hard hurdle that we're going to have to kind of learn to mitigate the risk for the lender to feel comfortable lending.
Oh, that's so interesting. Overall, what do you think is going to happen this year in the market? Do you have any specific predictions? I know we kind of talked about like people coming back in and buying, but is there any other like good vibes, bad vibes? Do you think it's going to be a good year?
I think it's going to be a fantastic year
good.
in the real estate market.
Yeah.
I think it's going to be a great time. We've had a lot of scare over the last 3 years. This is going to be the first one where people are going to breathe and they're going to be like, okay, this is my year. I'm getting in.
I really hope you're
either
right.
one way or another. I'm getting in. The interest rates by 2026, we're looking to be in between 2.5% to 3%.
Okay.
That's going to be a comfortable interest rate for the economy, for people to be able to afford and keep having a comfortable lifestyle. So definitely it's going to be a fantastic year. My focus is always teaching and teaching and teaching, because I think the most important part for people is to understand what they're getting themselves into. And if they're not ready, how can they get ready?
Yeah.
Because it's not a one-stop shop. You got to prepare yourself. It's the biggest purchase you'll make in your life. And you can't just wake up and say, I'm going to buy a house.
Yeah.
So just having the tools to be able to prepare yourself to get there, it's what I think is going to be my main focus for 2025, so that people are ready, prepared, have the knowledge to get into the market and start living their best life.
Okay, and then just to wrap things up, what is the best real estate advice you've been given?
It is so related to what we've been talking about today. And it's so true. You are going to date the interest, marry the house.
Yes.
Because the interest, you just switch it next year. Just switch it. It's not good for you. Just switch it. Change it to another one. But you'll still keep the same home that you had a dream of buying.
That's great advice. And easy to remember.
Yes.
Simple, straight to the point.
Straight to the point. You could do a 1-year mortgage. That's it.
Yeah.
Then renew to another rate.
So thank you so much for coming again,
Thank you for
Paulina.
having me.
I appreciate it. This was amazing. It was great to get your insight into the market, and I hope that you're correct about everything going well. If you guys like this podcast, please give it a subscribe, and we'll see you in the next episode.